Hello everyone, welcome back to my channel. I hope everybody are doing good. And today we are going to understand two very important accounting concepts in a simple way. They are the accruals and prepaids. Many people get confused between these two topics, but after watching this video, I hope you all will understand the meaning, example, and journal entries very clearly. If you are a student or accountant or preparing for any interviews, this topic will be important for you. So many of the interview they'll ask these two questions in the interviews. So watch the video till the end. Okay. So let's start with the accruals. Accruals. Accrual. Accruals is an accounting entry. Accrual is an accounting entry used for accrual is an accounting entry. It is used for record the revenue revenue or expenses. We'll record the revenue or expenses when we'll record when they are incurred. But payment payment has not yet paid or received. What will happen? Prepared first we will make the payment. Later we'll book the amortization to parental account. So let's understand. Accrual is an accounting entry used to record the revenue or expenses. When we'll record revenue and expenses when they are incurred. But there is no cash or bank is involved. Here the payment not yet been paid or received. So we did not paid anything, we did not receive anything. So this is the accrual concept. Let's understand with the examples. Example, I will take salary or rent. So we paid 10,000. The salary will be 10,000. Salary rent will be 10,000. This is debit and this is credit. So if we paid cash, we paid salary or rent. So entry will be salary account data to cash account. This is not an accrual entry. Why? Because this involved cash. If there is a cash or bank involved, that is not an accrual. If we did not paid cash, then what would be the entry? So same entry, cash or here only instead of cash, so we can salary or rent payable account. So this is the accrual entry. So in this one, so salary means expenses, cash means current assets. So expenses is comes under profit and loss account. Current asset comes under balance sheet. So same thing here also, but this is not current asset. This is current liability. So this is also profit and loss account. This is also balance sheet. So this is the actual accrual entry. There is no cash or bank involved in this. So let's understand how this will affect our statement of accounts. So this is profit and loss account. Here expenses, amount, income, amount. Okay, I will just make a short table and one more for balance sheet. So I'll do here balance sheet. From balance sheet it is liability amount, assets amount. So what is the first entry? I will show this is not an accrual entry, but how this will impact our P&L and balance sheet. Salary means, what is salary means? Expenses. The heading you can see expenses. So salary element comes under P&L. What would be the amount? Amount is 10k. And this is cash. Cash means current asset, balance sheet. Asset this side. So if you have a our bank balance or cash balance, if you have a in hand 90,000 cash balance. So in that, if the if you paid cash, the rent or salary paid in cash, then cash will be decrease. How much? 10k minus 10k. Okay, this is the first entry. So salary hit to P&L and cash hit to or cash account. Before we have a 90,000 or cash balance, after paying the salary or rent or cash will become 80k, 80,000. So now we'll see the how accrual will impact to balance sheet. So for accrual entry also it is same. Salary means expenses P&L account. We already given salary means salary and 10,000. So it is and this is one salary rent payable. This is current liability. Current liability balance sheet. Balance sheet current liability side. I'll give salary or rent payable. How much? 10,000. So here it shows this would be payable. If we have cash, we can pay. If we don't have cash, we'll book it as a payable. We did not pay, we had to pay this amount. So this is how this will impact in our statement of accounts. So same thing. So if we have any purchase anything, purchase means purchase account debit 60,000. If you purchased iPhone something, purchase account data to vendor account. How much? 60k. This is also same. This is accrual. We are buying a product or some goods from the supplier or vendor. So on the credit basis, we are not paying anything to vendor. We are purchasing iPhone. The iPhone we are not paying. We are purchasing on the credit basis. Credit basis means it will come the accrual entries. So the accrual entry will be purchase account data to vendor account. So how this is impact to or statement of account. So this is also same thing. P&L. So if you purchase anything, it will comes trading. Trading P&L account or trading and P&L account. So purchase account it is 60,000 and payable means this is vendor account. How much? 60,000. This is the accrual entry for the purchase on credit base. Okay, this is the accruals and this will impact our financial statement like this. And now we go for prepaid. So prepaid also same. Okay, now let's start with the prepaid. 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 What is prepaid? This is also same, similar to the accrual. Prepaid is an accounting entry used to. So prepaid also same. This is an accounting entry will use to record. In accrual we are recording revenue and expenses. Here we are recording payment. Why? Because here we will make the payment first. Payment made in advance. Advance for expenses. Expenses before the service service received or used. So in accruals we won't make any payment or cash. So in this prepaid we'll first make the payment and later we'll receive the service. So this is the prepaid concept. Let's understand with the example. Prepaid. So we paid a example insurance. We have everyone has a bike insurance or will purchase any software, anything. We'll pay advance and later we can use. So example in Netflix, Amazon Prime. So yearly ones will pay, first will pay and later will use for the entire year. So here I'll take example as and for software also we'll pay the first and later we'll use the softwares. So now I'll take software software service. Okay, so what we'll do here, we'll make the entry, will first we'll pay the software payment, that is prepaid. So we are paying first, making payment prepaid software service to bank or cash account. What we are doing here, we are making the payment first. So payment we made 1 lakh and this is the current assets and bank is also current asset. Both are balance sheet item only. And so this is the 12 months. I will give 1 lakh 20, that will you can understand easily, per month 1000. So I paid my software amount in for entire year. I paid 1 lakh 20 for the entire year. So in the accounting books, so we will, this is the first entry after paying. So later what we'll do, every month we'll do the amortization entry. What is that? Software service account data to prepaid service. How much? 10,000. So every month we'll book the 10,000, 10,000, 10,000. So this is the expenses and this is the current asset, P&L, and this is balance sheet. This is the prepaid amount and this prepaid amount we are amortizing every month. So how this will impact to our P&L and balance sheet? I just copy this and paste here. Then I will delete this. So once we make a payment, so these two affect only balance sheet. Where it affect asset side. So example, in our bank account we have a 5 lakh. In that 5 lakh we paid a 1 year software service, that is 1,20,000. So if we paid the amount, then our amount will be decreased, bank value will be decreased. How much? 1,20,000. So this is the first entry. Once we make the payment, so this is how it will affect to the balance sheet. So this is we paid for entire year. So what we have to do? We have to book a amortization entry for every month. So January will book software service expenses. How much? 10,000. And if you paid, if sorry, this one, what will do? Will debit to the P&L and credit to the balance sheet. Once we book for the January, first month of the year, once we book the entry for these expenses, then our amount will be decreased. We already shown 10,000 has been expenses. So here 11,000 is left out. We showed already 1,000 expense in the profit and loss account. So every month we'll book like this. Same thing. Well, it will just add up the amount to this software service. And this is for February 10,000 and this is for March. So total 3 months we we booked the we use this software service, and here also it will expense will be less. So this is how you can see 30,000 plus 90,000, 1,20,000. How we'll book every month? If you paid and December month, if you paid, then profit and loss account we can see in December the software service will be 12,000 and prepaid service will become 0. So our software we completely use for the year. Software service expense has been booked. So this is how prepaid entry will be done in the accounting. So if you have any questions, please put me in the comment box. So I will respond if you have any questions or anything. So today we learned the difference between accruals and prepaids along with the example and journal entries. I hope this video will make topic easy and clear for you. If you found this video helpful, please like, share and subscribe to this channel for more accounting and finance learning videos. Thank you for watching and I will see you in the next video. Bye.